You might have heard of ESG from talking heads on TV.
And then ESG comes out and says, oh, you guys had a perfect score, Anheuser-Busch, but after the way you handled yourself with Dylan Mulvaney, we are lowering your score, and they're so scared.
And wondered what it meant, since they rarely explain it. ESG is an initialism that stands for environmental, social, and governance. But what does that mean? Here's former presidential candidate Vivek Ramaswamy talking about ESG investing.
Talk about wokeness and ESG and whether ESG is real and how ESG should be measured. And you have a very provocative view about all of it.
Look, I think it's actually pretty simple. Over the last decade, what we've seen is large asset managers have mandated U.S. energy companies to produce less oil, to produce less natural gas. And Andrew, what that's led to is a generational energy crisis, a massive supply-demand imbalance in the United States and around the world for fossil fuels. Now, the good news is U.S. energy companies can actually capture that opportunity, but they can only do it if they are liberated from these ESG mandates and these ESG constraints.
To be clear, correcting all of the logical and factual errors of this short interview would take longer than it's worth. A better source to understand what ESG investing is can be found on the Charles Schwab brokerage website. ESG investing is an approach that considers factors beyond risk and return, like climate change, labor management, corporate governance, and many others. There are many ways to apply ESG investing into your portfolio, including individual stocks, exchange-traded funds, mutual funds, and separately managed accounts. Performance of ESG funds has historically been similar to performance of non-ESG funds. ESG is often used interchangeably with socially responsible investing, values-based investing, impact investing, and sustainable investing. Looking at the Schwab Mutual Fund Screener, they have 521 funds that they consider ESG. First, some disclaimers. I'm going to be talking from the perspective of someone in the U.S. saving for retirement with mutual funds. Most of what I'm saying here applies more broadly, so if you're outside the U.S. or interested in individual stocks, this episode is still worth watching if you'd like to learn about what ESG is. Also, I'm not a financial expert, and this is not financial advice. So with the disclaimers out of the way, here's a view on what ESG is and how you can use it to improve your investment portfolio. One of the challenges is that there's a huge variety in what ESG means. For instance, this is how the Ave Maria mutual funds describe their approach. Morally responsible investing screens out companies engaged in activities that are not pro-life or pro-family. The moral screens utilized in the Ave Maria mutual funds are established by our Catholic Advisory Board, which provides guidance in accordance with the Roman Catholic Church. Our goal is to provide good returns without compromising moral values. Or there's Saturna Capital, which undertakes halal investing. They follow a value-oriented approach consistent with Islamic finance principles. Generally, these principles require that investors avoid interest in investments in businesses such as liquor, pornography, gambling, and banks. The funds avoid bonds and other conventional fixed income securities. Saturna Capital selects investments in companies that, to its knowledge, do not violate the requirements of the Islamic faith at the time of investment. These funds can be considered filters, where the fund managers filter out certain types of investments. Another type of fund actively seeks ESG companies. For instance, the Trillium ESG Global Equity Fund strategy is the investment seeks long-term capital appreciation. The fund invests primarily in common stocks of companies that the advisor believes are leaders in managing environmental, social, and governance risks and opportunities, have above average growth potential, and are reasonably valued. These are all valid ways to be ESG funds, but they have different focuses on what's important, and some of them might not be the way you want to meet your investment goals. It's critical to understand that ESG is not a well-defined set of criteria that are rigorously applied. It's a vague set of questions like, is this company operating consistently with my religion? Or is this company making climate change better or worse? That vary from fund to fund. Many fund managers see ESG only as a way to reduce risk from lawsuits and strikes. There are organizations like Sustainalytics, which is owned by Morningstar, and MSCI, which rate companies and mutual funds and ETFs on an ESG scale. These ratings are focused on the most general sense of business risk from ESG issues and may not focus on what's important to you. But the reports do offer detailed information about avoided business and climate emissions. So if you read them carefully, you may learn what you need to be an ESG investor. Some ESG funds are just a marketing gimmick, where the fund managers don't care about the environment, social issues, or governance. They just see it as a way to attract investors. For instance, I've seen Amazon in some ESG funds, and given their well-publicized union busting and broken climate pledges, I take that as a sign that this isn't a good ESG fund. This is where the ratings from MSC and others can be very helpful. So, should you invest in ESG funds? The first question you might ask yourself is, do these funds have worse performance? Schwab undertook a study comparing ESG funds' performances with non-ESG funds with similar investment strategies, and they found they performed about the same as far as risk and return, possibly a little better. There's a link to the study below. And ESG investing is getting more popular every year, as we can see here. There are a couple of reasons you might be interested in ESG funds. Some people think that companies with good ESG practices will outperform the market over time by having fewer lawsuits, labor struggles, and PR nightmares. These people will probably be happiest with how most authentic ESG funds are managed. Of course, an ESG fund in name only will not have a lower risk profile, since for that fund manager, it's just a marketing gimmick. A rating like the one from MSCI will be helpful, especially for these investors. Other people don't want to benefit from what they consider sinful or negative behavior. They don't have any delusion to stop gambling or banking or whatever negative behavior is. They just don't want to benefit from it. If this is your motivation and you find a well-performing ESG fund that aligns with your concerns, then you're likely to be pleased with ESG investing. But you'll have to dig deeper than just the MSCI score, since they won't necessarily tell you about the issues that you're concerned with. But there's a third group, myself included, who want to use ESG investing to leverage capitalism to improve the world. And for us, it's unclear if ESG investing works. Theoretically, two mechanisms could improve the world. First, an ESG fund may attract more investors, which increases the stock price of the underlying companies, which reduces their cost of capital. And in the climate space, the cost of capital can be critical. Secondly, executives are often financially motivated to increase the stock price, since much of their compensation is in stock. So companies will want to achieve and maintain their ESG status to boost their stock price. If they lose their ESG status, their stock price will slip as investors move to better companies. For this to work, investors need to participate in high-quality ESG funds. It needs to be made up of actual market leaders in terms of behavior, or Wall Street will learn that the appearance of good behavior is sufficient. The MSCI ratings are useful here. I was unable to find any studies that ESG investing changes companies' behaviors, but it's incredibly hard research to do since there's such a diversity of ESG funds and companies. So people like me are taking it on faith that ESG investing does improve the world. And if nothing else, I'm getting a reasonable return on my investment in a sort of guilt-free way. If you're aware of any research in this field, please put it in the comments. There are some, like Naomi Klein, who argues in her book, This Changes Everything, Capitalism versus the Climate, that capitalism cannot fight climate change effectively. She certainly has lots of evidence that our current system is responding inadequately. But I still believe that the current system with proper regulation and changes like effective ESG investing can respond to climate change. In part, I believe this because the alternative scares me. If our current system with some tweaks doesn't work, do we need to move to an anarcho-primitivism where we fight climate change by eliminating our fossil fuels overnight and living as subsistence farmers or hunter-gatherers? I'd like to think there's a solution that's a little less radical than that. But I have as much evidence of that as I do that ESG investing works. We have to remember our economic system, including the stock market, is a tool that should improve the lot of humanity. If it can't, by solving challenges like climate change, then we need to seriously consider how we structure society. But that's beyond the scope of this video. So how do you move your investments to a more ESG kind of portfolio? It would be great if you could click a box and say, I want my investments to leave me a comfortable retirement in a world that I want to live in. And I deeply wish I could give you a simple checklist to accomplish that. But I do think it's worth the time and effort to align your investments with your values. So here are a couple of rules I go by. If your employer's 401k or 403b only offer you one ESG fund, put your money there. It might not be perfect, but there's a huge advantage to investing at work. When you change jobs, get a rollout to an improved IRA at a broker like Schwab or Fidelity. To be clear, I'm not recommending any particular broker, but do make sure they have good research tools. Once you're at a brokerage, you'll have many more options than you did in your company's plan. So how do you pick an ESG fund? Here's what I do. I filter on ESG funds. I filter on funds that get at least a 4-star Morningstar performance rating. This filter removes funds that have performed poorly historically. But as every financial advisor will tell you, past performance is no guarantee of future performance. I filter on no-load funds. These are just extra charges that don't go into your investment. I look at fund descriptions and remove those that aren't what I'm looking for. In the past, I looked at the top 10 holdings from the prospectus and made sure they're all companies that I'm comfortable owning. This is time-consuming. The publicly available tool from MSCI is easier to use and provides more information. As an example, I looked up one of the funds that currently makes up part of my portfolio, and its ESG rating isn't great, nor is its climate rating. My advice is to check your holdings annually. Putting this episode together has inspired me to review my portfolio with these new tools. This is not perfect, and if you have any suggestions on how to pick an ESG investment, please share in the comments. I wish people like Vivek Ramaswamy, who rail on about woke investments, were correct. That corporate America was suddenly concerned about women on their boards and how to improve labor relations because of ESG investing. I hope that ESG investing will nudge some companies to take climate change more seriously and help those that do to be more successful. But we can't kid ourselves. Companies are mainly concerned about making money, and if the laws and regulations allow them to make money trashing the planet, they will. ESG investing may tweak things around the edges, but we need policies that introduce a cost on carbon to get corporations to pay attention to climate. If you've learned something, please like and subscribe. If you want to support this channel financially, you can buy me a coffee. The link is below, or right here. And please share this video with anyone you know who needs to work on their investment portfolio.